So according to that very simple guideline, that W that I've drawn there, which is something that I often do myself when I'm analyzing the markets, according to that W, I would expect the trough of the 40-week cycle to occur over here. In other words, right over here. In other words, in the first week of June. So that's one thing that I've noticed. As John says, I wonder if the 18-month FLD will be touched next month. The other thing that I have often noticed is that when a trough of a 40-week cycle is formed, price will often, I call it flirting with the longer FLD. Price will come down and fiddle around with that longer FLD, the 18-month FLD. So it wouldn't surprise me. And again, I'm deviating really from strictly Hurst's theory, but these are things that I've noticed. It wouldn't surprise me if towards the end of this month and early next month we see price round about these kinds of levels, which implies price in the very low 1200s, in other words, fulfilling that target, or even a little bit below the 1200 level, and flirting with these levels. In other words, it's not impossible that price could come down here, find support on that 18-month level, bounce up a little bit, or even come down there and then bounce up again out of that 40-week cycle trough. It wouldn't surprise me at all. Support and resistance are always fascinating to watch in the market, and FLDs are really just another way of identifying support and resistance lines on your charts. Okay, and I notice a comment from Blair. Additionally, even if 2009 was not a 9-year low, the 9-year cycle would be flat, so the 54-month down is the stronger influence in the underlying trend. Okay, so Blair is extending our argument about the underlying trend of the 18-month cycle. So in other words, the underlying trend for this 18-month cycle over here, and discussing why that peak did not achieve its target projected from that FLD cross, because he's saying that the 9-year cycle would be flat, and therefore the 9-year cycle wouldn't be providing much upward impetus, so the 54-month cycle would be providing a strong downward impetus, therefore giving us a negative underlying trend. Underlying trend is extremely important, and it is also fascinatingly complex. Because you have to consider underlying trend for each and every cycle as the cycle shapes unfold. Right, well, we've hit our 45 minutes, which is my target for for Trader Chat. But I would like to, before we close today, today's been really a discussion of two FLDs, the 40-week FLD and the 18-month FLD. But the summary in terms of what I'm saying for what's happening in the US markets is that I don't believe that anything has changed, and I think that whether price has crossed this FLD or whether it hasn't yet, it will do soon, and we're still expecting lower prices over the next few weeks to come. And don't be fooled by this week's sudden upward movement. Now, to in some ways sort of corroborate this analysis, I'd like to do two things, and the first is look at the South African market very quickly. We're just going to take a glimpse at the South African market. John says he thinks the mid-June low is a good target for a low. Thanks very much. Thank you, John, and see you at the next Trader Chat. Okay, I'm going to quickly take a look at the South African market. Now, the South African market is an emerging market, as I mentioned already, and so it has a slightly differing analysis to the analysis that we have just been looking at in the S&P 500. However, in the bigger picture, what tends to happen with the different markets is that the bigger pictures are absolutely in line with one another. Okay, so the bigger picture for the South African market is very much in line with the analysis that we've just been looking at. But there are a few very small, subtle details which I use to corroborate the analysis between the different markets. So I'm going to show you how very quickly, just a few minutes. First thing, this is a median line chart of the South African market. Let me not waste time saying too much about it, except the fact that you will notice the 18 trough, the last 18-month trough, occurred, in fact, on exactly the same day as that trough in the U.S. markets, which was the 4th of October 2011. Okay, that is also the 18-month trough in this particular analysis. Now, the 20-week trough in the U.S. markets, as we were looking at a moment ago, in fact, has been phased as having occurred on the 30th of January. So here's the first difference with this analysis in the South African market. And I know the South African market might not be of much interest to many of you, but it is of great interest in terms of corroborating what's happening in the rest of the world. This 20-week, as you can see, occurred, according to this analysis, in the second or third week, or in the middle of February. Okay, that's where the 20-week cycle occurred. All right. The fact that that cycle occurred slightly later has also pushed the 80-day cycle trough, which in the U.S. markets we were looking at a moment ago, was positioned here on about the 9th of April, I believe. In the South African market, the 80-day cycle occurred, in fact, just a week or two later, in about the 3rd week of April. Okay. Now, this analysis looks very good. It's probably, I believe, if you were trading this market, this would be a very good analysis to trade with. But I'm not showing it to you to discuss the actual trading of this market, but to show you how when you're approaching times of critical decisions. And I see a question from Bruce, and I'll get to that in a moment. When you're approaching a time of critical decisions, such as the formation of a very major trough, in this case we're talking about the 40-week cycle trough, is happening now. It's very important that I believe that you look at various different analyses, various different markets, because different markets will experience major troughs not necessarily on exactly the same day, but you can use evidence from different markets to bolster your confidence about the analysis that you're looking at in the other markets. So if you're asking yourself, has the 40-week cycle occurred in the US markets? Did it occur yesterday? I think that was the lowest price yesterday, or was it Friday? Has that 40-week cycle trough, has it occurred? Should I be going long already? The first thing I do is I look at other markets. And if generally many other markets are showing that 40-week cycle trough is still expected, then I believe you need to be careful of jumping into the market and saying, okay, that cycle trough has already occurred. And certainly in terms of looking at this South African market, it is very clear. And again, this is good analysis. And as you can see, the 40-week cycle trough is expected in this market towards the end of June, so slightly later. We have a little more time that is still expected to play out. And as you can see, the South African market has not bounced up this week as the American market has. Okay, when one market bounces up and several other markets don't, it's a sure sign that in fact the bounce is just a smaller cycle causing things to bounce in the other market. So for that reason on its own, as a South African trader, I would choose not to consider the current bounce in the US markets as having been a bounce out of the 40-week cycle trough. Okay, so I find it useful to take a look at the South African markets. To answer Bruce's question, isn't the South African market dominated by commodities? Yes, Bruce, it's very interesting because the South African market, I wouldn't say it's dominated by commodities, but it's largely influenced by commodities. And I could spend a long time talking about it, and we won't be able to. But it is largely influenced by commodities. The South African market is a very interesting market, I believe, even if you're not actually trading it. It's a very interesting market to look at because, as you mentioned, it is pulled one way by commodities, and particularly by gold. Okay, so the South African market is very strongly influenced by the price of gold, but it is more strongly influenced by the American markets, and there's an interesting interplay that happens between the American markets pulling on the one hand, as you can see, forming really sort of clear troughs here on the 4th of October 2011, which was a US market or global stock market trough, as opposed to a peak in gold price or anything like that, which of course occurred in September, so it occurred a little bit earlier. Yes, the South African market is influenced by commodities. I think the American markets win the day, which is why I analyze the South African market using synchronized troughs. As you can see, I'm not using peaks as I do for commodities. So at the end of the day, the stock market, the stock side of the market wins out, but it is very interesting how it is often influenced tremendously by commodities. That's the sort of quick answer. Lucas, how about the Euro US dollar outlook? Okay, well, the Euro US dollar, and I'm going to have to wrap up today's trader chat with a quick look at the Euro US dollar. I'm sure I've got the Euro US dollar here. Here we go. Here's the Euro US dollar. The Euro US dollar, where are we? Let me get to the other chart. This is my preferred analysis on the Euro US dollar. Here we go. So my preferred analysis of the Euro US dollar is that the Euro US dollar is presently bouncing out of a 20-week cycle trough. So here it is, and you can see that we have a slightly bearishly shaped 18-month cycle. Okay, at least a 20-week cycle. There is the shape of that cycle. It seemed possible that trough might have formed on Friday, but it was way too premature to start calling a trough of 20-week magnitude. Never forget golden rule number, I can't remember what number it is, golden rule number 4, which is that when long cycle troughs are forming in the market, be very careful of taking trades in shorter cycles. Very careful. So if you're trading the 2-day cycle or the 1-day cycle or the 5-day cycle, you've got to be very careful right about now, because the 20-week cycle is in the process of forming, and I believe the price today has dropped below the lows on Friday. I think I'm right in saying. So in fact, it looks as though that trough has not formed yet. There's the outlook for the Euro US dollar. The Euro US dollar, I believe, is forming a 20-week cycle soon. It's expected very soon. This week, possibly next week. What's the latest that the 20-week cycle could be expected? Well, it all depends. Let's count some bars. If you agree that that's a trough of the 80-day cycle, and that's the trough of the 40-day cycle, then in fact we've only had 36 bars in the current 40-day cycle, so we could have another 15 bars and not break any of Hurst's principles. So in fact we might be waiting another 2 weeks for that 20-week cycle to form, although it is almost certainly going to form before those 2 weeks are out. But you must be careful when long cycles are forming troughs in the market. Be careful of jumping into trades on shorter cycles. That wraps up today's Trader Chat. Thank you very much for joining me, everybody. I do hope you have found it interesting, and thank you for your interest in Sentient Trader and, of course, in Hurst Cyclic Principles. Thank you very much for being with me, and I look forward to seeing you all in 2 weeks' time at our next Trader Chat, or tomorrow in our Oz Trader Chat.